Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of Euro USD. So let's get started. So this is the 4-hour chart of DXY in front of us, and as we all know that understanding the body language of DXY, understanding or having a knowledge of the critical levels of DXY is extremely important if you trade on any USD pair to understand what is going on in the chart of DXY. Right now DXY is standing at 103.38. This is the current market price. Though we have seen some sort of correction on the chart of DXY, but my dear friends, keep in mind that this is just the correction, not a trend reversal yet. If we look at the chart of DXY carefully, then we can see that overall the market is still very much in uptrend. And right now DXY is trying to bounce from the Fibonacci 23.6% retracement level. In case market fails to bounce from here, then yes, there may be some more correction. There may be further correction on DXY, but I'm very much positive that market will or DXY will bounce from 102 to 102.50 level. Why this level is so important and why there is a high possibility of DXY bouncing from this level? Because see, this is not only a support zone in the form of static support. Okay, this is also a support zone or Fibonacci 38.2% retracement also. So we have a static support, we have got Fibonacci's 38.2% retracement level, and in addition to that we also have a trend line. So if we combine all the factors here, there's a high chance that buyers will try to reverse the market from here, or at least buyers will try to push the market up from here. So if DXY falls further, then market will bounce from here, and if market bounces, yes, we will see some correction or some selling again on the chart of Euro USD. So overall, as of now, this level will be very critical for DXY, but let's see how DXY does in the Fibonacci 23.6% retracement level. Now let's look at the chart of Euro USD. So this is the 4-hour chart of Euro USD in front of us, and as you can see that I have marked 3 levels. Okay, right now market is trading in the middle. Okay, if you have any ongoing position on Euro USD, then you can continue with the position. But if you're looking for a fresh entry in the market, then I suggest that this is not the right time, because see, market is trading in the middle. Market is standing in the middle. If you take a buy position, okay, with any logic or due to any indicator, okay, if you take any buy position, your stop loss will be here. Okay, the stop loss is big enough, not justified. If you take any sell position, then also your stop loss is big enough. Either your stop loss will be here, or a proper stop loss will be here. So the risk to reward ratio is not much in your favor. So as a result, I'll just say that it is better to avoid taking a position in the middle. After all, it's your capital, it's your hard-earned money, so please protect it. Okay. So if market goes up, then there is a high possibility that market will be reversing from 1.0640 to 1.0650 level. In fact, 1.0620 to 1.0650. This is a whole resistance zone in the market. Why this is a resistance zone? First of all, we have already seen price rejection from above in this level. Then we have Fibonacci 23.6% retracement level, and then we also have the 200 moving average coming down. Okay, therefore we have got three factors supporting us or giving us the indication that this level will be acting as a very strong resistance for the market. So if market goes up, there is a high chance that market will reverse from here. If market reverses, definitely we can take a sell position. Yes, reversal and confirmations are always important. Okay, so if market reverses from the resistance zone, definitely we can take a sell position. But on the other hand, if market goes down, that's the strongest support zone, is around 1.0350 to 1.0370. I don't think so that this level needs any explanation, because we have already talked in detail. We have already discussed extensively in our previous videos. So this is the strongest resistance zone on the chart of Euro USD right now, and this is the strongest support on the chart of Euro USD right now. Apart from these two levels, okay, you can see that I also have mentioned another level here, 1.0470, 1.0460. Why I have marked this level? Let me tell you. First of all, price has shown rejection around this level previously. Market broke the level here, but previously market has shown price rejection from this level. Try to understand. Okay. And now if we go to the 1 hour chart, and if I draw a Fibonacci retracement levels here, then we can see that around this level we have the 50% retracement level. On in forex market, 50% retracement level works well. Okay, so as a result, if there is no news in the market under normal circumstances, okay, if market comes down, then there is, I think that there is a possibility of market bouncing from this level as well. But my dear friend, you can see that I have also mentioned it has low reliability. So if market comes down to this level, observe the market. If you see price bouncing, price reversing, then only take a buy position. Otherwise, the most reliable levels on the chart of Euro USD right now are these levels and this level. And whatever you do, please keep your one eye on the chart of DXY. Okay. And right now things are quite critical for Euro USD or any pair right now, because as we all know that the whole world is facing the problem of inflation right now. As a result, banks, the central banks, are taking drastic steps, and probably we also have a recession coming up. Okay, so things are very critical. The war is still going on. So as a result, my dear friends, follow proper risk management. Do not trade without a stop loss. Keep your stop loss intact and do not compromise with the protection of your capital. Okay, and today also I think CPI coming up. If you go to forexfactory.com, okay, May 18th here, yes, final CPI. So yes, there will be some volatility also. Please be careful, follow proper risk management, and enjoy the day. Bye bye, take care, see ya again.